Let me look at what we can expect from the local session today now. Stan Shamu from IG in Melbourne joins us. Stan, good morning to you. All that M&A activity in Wall Street session, but stocks really going nowhere. Heinz jumping about 20%, although at the close it actually ended pretty much bang on that offer price, $72.50 a share. What did you make of the session?
Yeah, no, absolutely. It certainly was an improvement in sentiment from what we saw in Europe. Of course, most of the European bosses were actually quite weaker on the back of those weaker than expected GDP numbers for France, Germany, and of course the Eurozone in total. But of course, with US unemployment claims coming in ahead of expectations and talk of M&A activity ramping up in the US, it certainly seems like this gave the US markets a bit of a lift and helped minimize that downside. So I mean, of course, with M&A activity, it always feeds quite well through to the market. It gives a bit more confidence to investors out there, and it really does make it feel like everyone's getting a bit more comfortable with the current situation, and the economy is back on the recovery path. So I think as a confidence booster, it does a lot for the US at the moment, particularly considering where they're coming from over the past few years, where sentiment and confidence had completely deteriorated.
Stan, currency is very much in focus ahead of that G20 meeting, which kicks off in Moscow today. How are you playing the yen in light of that? Obviously, that's going to be one of the hot topics, and a lot of consensus is mixed as to just how hard the G20 will come down on Japan over that currency.
Yeah, absolutely, and it's even more daunting considering some of the mixed statements we've had from some of these leaders over the past week. Of course, at some stage we were under the opinion that they weren't concerned at all about Japan's weakening of its currency, and of course we were thinking that the US and other countries were quite happy to see Japan try to stimulate growth and, of course, get itself out of this deflationary phase. But at the moment now, it does seem like a lot of traders are positioning themselves for a bit of a slap on the wrist on the Japan front. And just the price action in the dollar yen at the moment, it's dropped quite significantly early in Asia to around that 92.70 level. So we certainly can see that traders are positioning themselves, just getting out, locking in some gains, and just trying to be careful, as no one really knows what's going to come out of this G20 meeting. The best strategy will probably be to buy on the dips as soon as we know what's actually happening with the G20, after we've seen sort of what comments are coming out of the G20. On the Japan front, I mean, of course, nothing's changed at the moment. They didn't announce any further monetary easing steps yesterday in the BOJ meeting, but it certainly seems like they're not going to get off this recovery path, and they're very motivated to keep this yen quite suppressed and stimulate the economy. So I suppose as soon as we know what's happening with the G20, should the dollar yen continue to drop, then it could give fresh opportunities for longs, and we certainly feel that being on the long side of the dollar yen's the better outcome than trying to pick the top and shorting the pair.
All right, in terms of what to expect from the local market today, we've seen the banks have a great week, with CBA, of course, booking another record half-year profit on Wednesday. ANZ's result just out this morning. Do you expect, I guess, the bank's run to continue today?
Yeah, of course, CBA certainly set the market alight this week and set the tone for a very strong week. We're currently up 1.3% so far for the week, but unfortunately for today's session, we're currently looking at a 0.2% fall to around 5029. So it's a slight pullback from yesterday's close, which was at around that 5035 mark. But we do have a few things to look out for today. Just starting off with Rio Tinto, of course, the miners will still be in focus after a pretty good run yesterday. Rio obviously came out with its results pre-UK market and post-Australian market trade. Their earnings came in at 9.3 billion, and that was slightly ahead of consensus of around 9 billion. At the same time, their dividend came in quite strongly at around that 164 marker, 167 mark, and most analysts, I think, were expecting about 154. So now that's pretty positive. But a lot of analysts still feel the result wasn't really a game changer. Of course, those write-downs to its coal and aluminium assets were expected. but we haven't really seen anything that will suggest that the company will have a much stronger FY13. I suppose as well with the current improvement in iron ore prices, then we can expect iron ore to remain fairly solid. But I think investors wanted to hear something to the extent of what the Rio is trying to do to change things going forward, particularly with the change of guard, with Tom Albanese leaving the company and Sam Walsh coming in. I suppose change is always good, as long as we can see what sort of direction it's going to take. So we haven't really seen any analysts make any major changes to their ratings. Goldman Sachs is happy to remain neutral until they hear something a bit more encouraging from the company. So yeah, that will be interesting to watch how it responds. It was up in London, but we had already rallied into the result yesterday, up over 2%. So we might open slightly stronger today, just a bit of follow through buying, but I don't see what can really ignite the share price today. Apart from that, I mean, BHP is actually pointing to a drop today of about 0.4% at the open. So it seems like generally the materials will be struggling today, but we'll have to see how Rio responds to the results. With ANZ, of course, the margin pressure in New Zealand has really crimped them for the first quarter update. But the company still seems to be in good state. They've maintained their FY guidance. At the same time, I think they've got pretty good revenue growth going forward. I think they will have some cost-cutting incentives as well to keep the market happy. So I think it's still in a good position. Apart from that, there's nothing major on the reporting front. I think we've got the likes of Duet Group, Sims Metal, but they don't carry as much weight as the banks, I suppose. We'll have to continue seeing how investors respond to this CBA result after some analyst changes. Of course, the stock's been trading at very high levels, and it's really hard for a lot of investors to justify getting involved at these levels. Yeah, apart from that, I think it will be a fairly flat session earlier on, and we'll have to see how things develop as the session progresses.
Stan Shamu from IG, thanks so much for the update.
Cheers.
The government has been forced to declare it won't be increasing